You know, I still remember all the comments of people talking about us entering a bear market cycle and having to wait for years for the next moves across crypto space. And yet, a lot of things have changed in a very short period of time, even including the last 24 hours. And now we're actually on the verge of seeing major liquidity injections into the markets. And we need to have a discussion about that, because what it's showing right now, if we continue to follow this trend, is that this summer is going to bring a lot of boom for the space. So if you guys are new or haven't already, make sure you hit that subscribe button down below, hit that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So I'll get to this comment in just a moment here, but what I did want to point out is, right now it's about 7:10 a.m. Central Standard Time. US money's just waking up, and it's a consistent theme so far. It's a lot of green. There is some chop. We'll just have to be patient and wait and see how the day moves on. Hopefully it's a trend that does in fact continue. But I think right now we're at a point where a lot of people, they've been sidelined. A lot of people woke up this morning, saw the green candles, and so they may end up chasing. We may in fact see higher prices as the day goes on. Unfortunately, this is going to come out at 3:30 p.m. Central Standard Time, so I don't know where we'll be at. But what signs are showing is that things are going to continue to change very, very rapidly in the crypto space. So there was actually a comment from a viewer that posts all the time, and I have to say we're not always in agreement, but this I do agree with. And what he said was, well, the new narrative out there is stack in May and everything will be okay. There's a higher chance of no summer sell-off this year. Treasury just bought $35 billion in bonds, and the first trade deal with the UK and other countries are going to follow soon. And this is 100% correct. All right. And I'm just going to break this down, because the Treasury buying $35 billion in bonds could actually indicate that interest rate decreases are coming. Could also mean that money printers are going to fire up. We're going to see injections of liquidity into the economy to help stabilize things. So these are actually very good signs for what potentially comes next. And in fact, when we're talking about rate cuts, there was just a rate cut that just happened. Bank of England has cut interest rates by 25 basis points. So now you actually saw China cut rates. You saw the Bank of England cut rates. Japan stayed unchanged this last FOMC meeting. So now the Fed's hand is in fact going to be forced at some point, and it actually increases the likelihood of an interest rate decrease sooner than people were expecting, right? Later in the year just simply isn't going to work. Otherwise, the US is falling behind. And what that means is, guys, there's going to be, I don't want to say an economic boom, but there will in fact be more money entering the markets. Now, what that also means is that, well, not also means, but what I also do want to talk about is the trade deals, right? The US and the UK are obviously striking up a trade deal. It sounds like Canada's getting pretty close now. China is obviously in the works. India is very close too. And what you're going to start to see is this big snowball of trade deals that come into play that basically squash all these tariff concerns and uncertainty that was injected into the market that held us down over these last several months. So things are changing very, very rapidly. And I think a lot of people are in fact going to get sidelined because of this. And this actually brought up this great point, is that this new narrative about stacking in May. I've mentioned many times that this cycle is very much following what took place in 2017. And if you guys remember, we've talked about this before. 2017 for the markets was a time of a lot of boom. We saw retracements, we saw consolidation periods. Basically, late April is when things finally started to make their run, right? But then what we saw was a period of just boom, 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 boom. We saw only like a couple weeks of downturn, and then it was just resuming the boom, right? And with this now printing of money, with global liquidity on the rise, these are things that can in fact create this scenario where the market just does continue to run and run. And in fact, when we're looking at where the charts are now, and we look at that M2 liquidity, guys, look at how this is tracking, right? It is almost to perfection. I had this laid out a little bit better before I had to move the charts, but you guys can see what we're doing on the 78-day offset. Look at that's where the market wants to run. This is a very, very big deal. And what's even indicating more that we're going to start seeing capital flow into more speculative assets, more risk on assets, is gold double top forming, right? All this uncertainty that created this flocking to gold is now going to start bringing money back to the markets. And that is where crypto tends to do well, is when people are moving their capital into more speculative assets. Now, a couple things to watch. DXY still kind of floating around the same range. This is an okay spot to be in. 10-year bond yields just kind of floating around here as well. We're kind of in I'll call it a comfortable position. entering the summer here. Now, obviously, it's still the early part of May. I still think May is going to finish on a green note, give us a nice boom across the space. But what we're seeing is this period that may, in fact, create us on take us on one of the biggest alt seasons we've ever seen. And that's where, again, you can see ADA surge to some of these new all-time highs and surprise a lot of people. Remember, the projections for this market cycle have been somewhere between 10 to 12 trillion dollars in terms of the global market cap of crypto. And understand that, a lot of that comes later on in the market cycle. Now, there have been a lot of discussions about when that will be. Our original projections were the top was going to be in October, and that could still be the case. But with the way that things are going from an economic standpoint, from the way things are heading on a global liquidity standpoint, this may in fact extend the cycle. We could be talking about a potential super cycle still. And we're going to have more discussions about that later on in the year. But what this is all kind of pointing towards right now are some pretty big months ahead for the crypto market, ones that are going to cause a lot of people to chase. Remember, we still haven't seen a big surge in adoption here in this market cycle alone, and you can only hold back adoption for so long. It's going to organically do what it wants to do, but very soon you're going to see marketing by institutional players. So you're going to see more about government embrace. You're going to see a lot of things change, and it's going to be quite the show. So I appreciate you guys as always. I hope you enjoyed the video. Let me know your thoughts below, but have a great day. I'll catch you guys in the next one. Take care.